Thanks again, everyone, for joining. Super excited for this. I know we're living in a world of uncertainty and a lot of moving pieces and volatility. So I'm looking forward to this session where we can, openly and transparently talk about some of the questions and concerns that are on your minds in these uncertain times. I'm Patrick. I'm co-founder and CEO of Tracera, an AI-powered sustainability data management platform. The best way to think of us is if sustainability had an operating system, we would be it. We automate and collect and audit and report on sustainability data with a high focus on industrial, manufacturing, real estate companies. But we also work with some consumer packaged goods and retail companies as well. Today, I'm very honored to be joined by an amazing guest, Gergana. I've had the honor to work with CFGI in the past. She brings a wealth of knowledge and experience in the space. Yeah, Gergana, would love if you could introduce yourself before we can get started.
Of course. Hi, Patrick, and hi, everyone. I'm still not used to not seeing everyone, but I can imagine a lot of digital faces. So thanks a lot for joining us today while preparing for the Easter break. So just to introduce myself quickly, my name is Gergana, and I'm an ESG Advisory Director at CFGI. I have been advising companies on wider ESG regulation for about 5 years now, started with climate, and this whole universe of ESG has since expanded dramatically. So I've been working with companies on figuring out what the regulation means for them and how to translate basically the changing environment. As Patrick said, it's very uncertain times and things literally change by the day. And prior to joining CFGI as a director, I was at the Financial Conduct Authority, where I was again working on ESG strategy. And I have been working with a lot of different industries. So I'm really looking forward to discussing with you today what the regulation might mean. I will caveat that this is not a legal advice. So everything that I say, you can trust that it's based on current knowledge. But of course, always make sure you check this with a legal advisor as well. I'm really looking forward to the discussion.
Thank you so much, Gergana. Maybe before we get started with the slides, just a quick high-level overview of the agenda today. We're going to spend around like 5-10 minutes going through the slides. We prepared 2 slides that can summarize the state of the market today with what we know from EU Omnibus. And then we want to spend most of the time today going through your questions. Think from my experience where this conversation can get more interesting is when we start digging into the how and the who. So please ask any question, anything on your mind. Feel free to drop it in the Q&A, and Gergana and I can answer it today. Questions like how can I work with my CFO on this topic, given that this is now more of a value creation exercise maybe than it is a compliance exercise for you if you're no longer required to comply. Questions like what can I do if we're living in uncertain times and I got guidance from my legal team to just stop working on this for the next 6 months? What are no regret things that I could be doing, and who should I be involving within the organization? So feel free to throw questions and we will make sure to address them as we go. On this first slide, I'm sure many of you have seen different versions of this, but I just wanted to recap where we are to make sure that everyone in this room has the same level of understanding on the state of the market today. As you know, there were 4 waves under CSRD. Wave 1, wave 2, wave 3, wave 4. With wave 3 being the listed small and medium enterprises, and wave 4 being companies that are not EU companies, like companies that are headquartered in the United States, for example, with EU presence. Wave 1 were companies that are publicly traded in the EU with 1,000+ employees or below 1,000 employees. And then you have other large companies that have more than 1,000 employees or below 1,000 employees. Before Omnibus, all of these companies were mandated to comply with CSRD. But given the recent changes, specifically, there were 2 proposals. One around stop the clock, which basically delays wave 2. And then there are other proposals in terms of simplifying the requirement for CSRD. So for the stop the clock proposal, nothing really changed for wave 1, except that potentially the companies that have less than 1,000 employees may no longer need to comply if the second proposal goes through. For wave 2, there was a 2-year delay when it comes to CSRD, and these companies now are required to comply in 2028 following 2027 fiscal year data. And still, the jury's still out for companies that have fewer than 1,000 employees. SMEs, again, nothing has changed. Actually, sorry, there was a delay. However, the real change for SMEs is the introduction of voluntary, basically SME reporting. But that's still not also approved. And then finally, non-EU companies, which I'm sure many of you here may not be located in the EU, but still are exposed to the EU, given the legal division of your business. I think also the biggest change will come in the second proposal, which is not around stop the clock. So that's basically where we are today. Maybe before I hand it over to Gergana to talk about things that we know and we don't know about the market, any questions from the audience? Anything on your mind that you'd like us to go through? Please, again, feel free to drop it there. Maybe before I start fielding the questions, Gergana, would love your kind of high-level overview on this. I know you
Yes.
were part of the negotiation as well, so we'd love to understand a bit more what you learned during that.
Also to flag that, so for wave one, initial requirement was just for up to 500, over 500. So this is the main change that now we're getting rid of. Well, if it gets approved, the substantive proposal would remove the requirement to have a PI, and it will basically bump the requirements under over 1,000 employees. And with wave two, it was initially over 250. So that's a quite considerate increase from 250 to 1,000 that's being suggested. Now, as some background, the omnibus doesn't just focus on sustainability and CSRD. The EU started thinking about omnibus proposals from different regulations that apply to the economy across the EU in order to make it more competitive and to simplify the requirements. And when we're talking about omnibus, the first package, that includes stop the clock proposal, which has been approved. It went really quickly, the regulatory process, actually. I just saw today that it's been published on the official journal. So it's never before has been dealt with things so quickly within the European framework. So now we know that the stop the clock proposal, which delays the reporting for wave two and wave three companies, is in place. Officially from EU side, and now the member states have up until the end of 2025 to transpose it into country law. Now, what does it mean for countries where it hasn't been transposed? We can expect that they will kind of put the official CSRD regulation as it stands, will be transposed at the same time as stop the clock. So this is the current assumption that countries will definitely transpose the stop the clock by end of 2025. And after that, countries, the firms will have a bit more time to prepare, of course. And then the substantive proposal, the so-called substantive proposal, focuses on changing the threshold and also changing the content of the reporting to some extent. Now, this hasn't been discussed yet. There is an assumption that the changes will be discussed in more detail and, will be subject to further approval later this year, so around maybe September or October, but this is not known yet. So the only thing we know with certainty now is that things will be delayed by 2 years. And then just another thing to add, ESRS, the standards that currently companies use to do the reporting under CSRD, so the first reporters was using them, will be likely simplified. EFRAG, which developed the initial ESRSs, has been tasked with developing a new version, simpler version of the ESRSs, which was meant to be finished by October. Now, as of today, and again, admittedly, I only saw this in one source, the EFRAG Sustainability Reporting Secretariat has said that they don't approve the sped up process. They don't think it will give like the due diligence that is required. So again, on the simplification of the ESRS, we can assume that work will be done. It's likely to follow timeline around this year, but if the plan as it was rejected to have things finalized by October, basically remains TBC when exactly we can expect the new version of the SRSs to be published. And one last thing to flag, EFRAG is currently gathering views. There's an ongoing consultation on how the ESRSs should be changed. So there are 3 things to take away from here. It's, first of all, take stock of the wave that you might fall in now. So if you're already reporting under CSRD, basically keep doing it. It's not affecting you as of now. You might potentially fall out of scope if the scoping is changed, but this is again big TBC. If you're in wave 2, so if you currently have more than 250 employees, that's the biggest question. Is it still going to be applicable to you? How exactly the employee number will look like? I personally think that 1,000 is a big jump. From 250 to 1,000, it's a big jump. And yes, there was a lot of concerns being shared by smaller companies that they can't cope with this. But if we go back to non-financial reporting directive, for example, that had 500 employees. Now going to 1,000 is even more. So we don't know how exactly the employee number will look like. So ultimately, if you're in this wave 2, I would say that this is where the biggest questions lie. Are you meant to still keep reporting, preparing for report, especially if your country has already transposed CSRD, or are you better to just wait? I think this largely depends on the level of maturity of your reporting and where you are in the process. Because there are certainly certain things that you can use that you have done, and you can use them going forward, or you can prepare strategically. But I would say this is where the biggest questions lie. And then for the listed SMEs, they kind of were ready to wait anyway because they were coming later on. So for them, it's again like playing the waiting game. And Patrick, you already referenced the voluntary version of the SME, so like the VSME. This is currently, it was published in December 2024, but this will be used now to develop a slightly different version maybe that will kind of correspond better with the new regulation. But ultimately, what this lighter version of reporting standards requires is looking at key areas within climate change, employee workforce, employee well-being, and kind of prepare to report under those if you are to report voluntarily, which is, again, one of the biggest questions. Will companies choose to do that or not? And ultimately, is there going to be further guidance on how exactly to apply it? And we expect that there will be.
Amazing. Thank you, Gergana. This was very, very useful. Maybe before we move on to like more practical recommendations on what companies can do going forward, I see one question from the audience here around the VSME. So it's a question coming from a SME in the EU. And the question is around, from your experience, maybe looking at other regulations, potentially beyond sustainability in the last like 10, 20 years. This is not the first time this happens, right? It's happening in the sustainability world, but in the world of compliance, this is very typical. Maybe I think that one thing you pointed out, usually things don't move as fast. I think we're seeing things move at historically like high speed in the EU, which is great, because the European Commission is trying to move fast to provide certainty and clarity to companies that operate in the EU, with the objective of creating, more competitive advantage for EU companies, which I think the objective is great. Maybe the question is, what is your recommendation, or if you are like the chief sustainability officer of a SME that is listed in the EU, what would you do in the next 6 to 12 months?
Yeah, so that's an extremely good question. So it's and again, an important caveat. The whole conversation around the burden this reporting puts on was largely started because of this requirement for sometimes, smaller companies to start complying with this on a mandatory basis. And some of them could be even large companies, let's say with 250 employees. In the grand scheme of things, it might not be seen as that many. So having said that, there was a pushback and concerns being raised by smaller companies that they will have to comply with this, and it's not always easy. It's lean teams, it's lean budgets. Now, bearing in mind that the EU has largely small and medium-sized enterprises, and actually the majority are micro enterprises with less than 10 employees, this kind of gives us a picture on what we can expect from the market. So ultimately, we need to find a way to be doing things in a fair way that would not expose smaller firms to this, while at the same time being mindful of the need to have competitive advantage. So one recommendation would be to look at the VSME standard. It's explained in a really, really nice way on the EFRAG website. And there's like modules that companies can choose from. There's a basic and there's like fuller compliance model. I'm not saying start doing that, like as in start reporting against it, but at least be aware of the type of data that is likely to be required under these VSME standards. And I think that through experience and what we have been seeing the last, let's say, 4 or 5 years, we do know that climate change data will be required. We do know that workforce data is required, and there's going to be definitely, you know, with the human rights and with the social element, with the governance side, you will be likely to be mandated to report against that, again, depending on where the scoping will lie. But even if you're not mandated, would it be a good practice? Yes, I think so, especially if everyone will have this breathing space of 2 years to prepare. We will have a better view of where the market is and also where are the risks. So going back to what would be a practical step, look at the VSMEs, look at the data that you might require to gather, and then look at the data that might be requested from you by, let's say, if you're in someone's supply chain. And then what are risks and opportunities associated with the way you operate, and what are your impacts? So I would say this is a starter for 10, thinking about this wider picture of where does your company lie in the wider market, and how a good report might look like, even if it's a voluntary basis. What would make sense to the users of your report and the affected stakeholders of your report, you know, going back to the way ESRS labels them. I would say that this would be quite useful. And I know it's easier said than done because, again, sometimes it can be a team of 2 that are looking after this and there's other priorities. But again, having this additional time to prepare should be used in that direction. Just getting things ready for when it will be, you know, there from a maturity stage.
Thank you, Gergana. Very useful. And this was a question regarding wave 3. Actually, we just received another question regarding wave 4. So the question is, are the NESRS approved and available, and will they change with the EU Omnibus? Maybe just some background for everyone. NESRS is basically a specific ESRS for non-EU parent companies. And it basically offers insights on, you know, CSRD compliance for non-EU parents. So that's wave 4. So the question specifically, Gergana, is, you know, whether it's approved and available, and whether it will change with EU Omnibus. So it's 2 sub-questions, if you don't mind answering.
Yeah. So they're not ready. Now, a few months ago, there was a leaked version of a draft that has been proposed, where the so-called double materiality was kind of not moving aside, but there was, let's say, less impact on the financial materiality, as in it was expected to mainly focus on the impact materiality. Now, again, this was just a leaked version, which was extremely early stage, and I haven't seen it since. This was just like a few months ago. So as it is right now, we don't have an official version. We don't even have a draft version that's been published. Now, the non-EU ESRSs, they will definitely change. Well, you know, based on what we don't have and the things that we saw before, and based on the fact that the ESRSs will be revised in their current shape and form, we can expect that the version for the non-EU entities will be maybe simplified. Maybe there'll be certain data points that will not be required throughout the entire report, because as we know, with the non-EU level reporting, all subsidiaries will be required to be included in that, irrespective of whether they're EU or not, as long as, you know, this criteria is met. So currently there is no more information on what exactly will be expected, but again, we do hope that there'll be some sort of a guidance on how much different they'll be to the new ESRSs, but that would not be out before, let's say, mid-2026, I don't think, you know, based on the current speed of the ESRS review.
Thank you, Gergana. Very useful. We're going to jump into the how now and give you practical recommendations on the market. Maybe before we do, just a few quick updates. We heard back from the audience in terms of where everyone is located, and Maria, our marketing, Anastasia, our marketing leader, passed the knowledge to me. So we have many who joined from the European Union, particularly Norway, Netherlands, Switzerland, Germany. We have many attendees from the UK, We have around 16 states represented from the United States. So again, thanks everyone for joining across different time zones. Perhaps before we jump in, Anastasia, I would love to hear from the audience. So if you don't mind typing this question, and for the audience just to answer in like 3 seconds, it would help us make sure that we're empathizing and being compassionate and offering advice that is like relatable. If you don't mind sharing just quick, 5, 6 words. Number one is your title, is it sustainability? Is it compliance? Is it legal? Is it finance? Is it procurement? Second is, which wave do you belong to? If you know, if you don't know, you can say, I don't know. And then finally, also, what guidance have you received, or what guidance are you providing to your team? Is it to continue? Is it to stop? Is it to wait? Is it unsure and uncertain? I think it would be really useful for us to tailor some of the recommendations for the different waves. Again, I'm gonna go through the slide, but then again, I would love to, maybe I would go through them wave by wave, and would love to hear your like kind of thoughts on this. Maybe starting with wave one. Um, and those are the large EU, publicly traded companies. Um, you know, our recommendation, again, this is also consistent with what we've seen with some of our customers and our partners, is just to continue. Nothing really changed. I think it's actually very useful that the second draft of the Omnibus will provide a bit more clarity and hopefully simplify some of the things that you're doing. I think it's a good thing. I think actually a lot of companies that were in that stage that I've been working with in the last few years sometimes may have kind of over-reported or felt that they need to provide more detail than needed for certain topics. So I think it's a good thing if we can simplify for those wave one companies. Um, I think that I think you should continue. I don't think this is the time to stop, because you're still mandated to report. The timeline hasn't changed. Um, and I'm talking specifically for companies that have 1,000+ employees. For companies that have below 1,000 employees, and Ghana is right, that jump was major from 250 to 1,000. For those companies, it still is useful to continue, at least continue with no regret activities. So activities that you will need to do anyway, like double materiality assessment, like gathering foundational data, like greenhouse gas data, specifically, scope 3 purchase goods and services, if that's, for example, a material topic for you. So for me, no regret activities include DMA, they include gap assessment, they include gathering KPIs that you will need regardless of regulations or non-regulations, based on your DMA. And again, this is from our existing customers, and this is also from some of our partners from KPMG and PwC, and what we're seeing out there in the market. Gegana, would love to hear your thoughts on Wave One, given your experience working with these companies.
Yeah, so with the Wave One EU pies, which were initially over 500, they're still expected to report. Of course, a lot of them have already published their reports. We saw quite a lot of CSRD aligned reports coming out in March and February. We expect a few more later this year for those that have a later year end. And of course, for them, nothing has changed. As you said, they're not subject to the stop the clock proposal. They will be subject eventually to the substantive proposal if it gets approved, with the main change being, instead of over 500, it will have to be over 1,000, and the reference of a pie is removed. So there's going to be no reference to the text if it gets approved, if this proposal gets approved. So they've already started reporting, and if again the scope changes, it's not going to be earlier than 2026. So again, definitely have to keep complying with the regulation. The stop the clock will not apply to them. And the main thing for them that might put them in a slightly trickier situation than the others is that ultimately they would have probably produced 1 or 2 reports even against the current ESRSs. And then if the content of the ESRSs changes, it's not known as of now how exactly this can be utilized by those who have already reported, because we all know that the comparability of information and making sure that you can go back and compare it against last year is what makes it useful with the investors and the users of your report. So this could be the main question that they will have to have answered at some point. I'd assume that for them it will make more sense to keep using the SRSs as they're currently using it, and then potentially evaluate to what extent the new SRSs, once they get approved, are different to the current ones, and whether it makes sense to transition to those. Again, that will require some extra planning and some like reassessment and some investment in that. But ultimately, as of now, just continue because compliance will still required.
Thank you so much, Gagana. Maybe one thing to add beyond compliance before we move to wave two, and thanks for everyone who's answering the questions. I'm going to go through them, obviously in an anonymous way. My suggestion for wave one companies, especially the ones that are below 1,000 that are living in the world of uncertainty right now, is think about what metrics really matter to your business to drive value creation, right? And those will most likely come from the CFO or from the finance department or from the CEO, depending on, again, the size of your company, or FP&A. But, if you think about for most businesses, right? If you remove some of the very upstream businesses like oil and gas or mining, for 90% of businesses, sustainability efforts are a value creative exercise. You will increase your EBITDA, you will increase your revenue, you will reduce your cost by embracing these levers. And that is the truth, right? I think I actually see this delay or this simplification as an opportunity. And I'm actually starting to see it because a lot of sustainability managers um, are now able to actually free up time to focus on that value creation versus just running towards like specific compliance. And I think this is an opportunity in disguise. So my advice for those companies is, if you need to refresh your DMA or do your DMA, I think this, for me, DMA is a strategy refresh. It is a great opportunity for you to be able to engage different stakeholders across the business, including CEOs, board members, CFOs, um, suppliers, customers, peers, rating agencies, auditors, to basically understand like what are truly the risks of your business, right? Regardless of compliance or not. Like if steel is a big part of your supply chain, and then you see steel has an inflationary risk given everything happening in the world right now, from tariffs to CBAM to just the lack of green steel, and you see that kind of being an inflationary risk on your operating margins and on the cost of doing business, then this is a good time to start gathering those data points to helping you understand, do you need to bring R&D into the picture? Do you need to rethink your supply chain? Do you need to create circularity programs to buy back from your existing customers as a way to be able to recycle steel? Again, I am just thinking out loud. Every business is different, but I think this is an opportunity now to take a deep breath and then take a step back and think about, okay, what are metrics, what are performance metrics, operational metrics, financial metrics that will really move the needle when it comes to expanding my EBITDA and helping us become a more sustainable and successful business. I see that a lot with PE portcos. If you're owned by a private equity fund or just a fund, whether it's like the Norwegian Sovereign Wealth Fund or the Dutch Sovereign Wealth Fund, I see a lot of businesses thinking that way because those businesses tend to have, a 5 to 7 year horizon to transform their business. But it doesn't mean that all of the other businesses that are within wave one that are usually publicly traded should not be thinking the same way. And I think this is an opportunity to do that. Maybe before I pass it over to you to talk about wave two, I'm just going to read some of your answers and I'm going to keep it anonymous. So we heard from many of you. So again, thanks everyone for jumping in. We heard from a global ESG controller, part of wave two, who decided to pause and wait on simplified ESRS, but in the meantime, updating their double materiality assessment. We heard from a sustainability manager from a company less than 500 staff, wave two question mark. What do we need to ensure we collating the right information going forward? Should we do a gap analysis? So that is an interesting one. Maybe we can tackle that shortly. We also heard from an internal controls manager and a sustainability governance business area lead that falls under wave one. We also heard from a corporate advisor working for an international large-scale NGO, looking to align data from the field to be an asset for business that are required to report, to add a value of real-life data and narrative, which has a real impact on individuals' life and vulnerable local communities worldwide. Loved hearing that. We heard from a head of group GRC and sustainability, part of wave two, continue to collect emission data, but no other data points. time will be moved to define the strategy and cost-saving initiative linked to sustainability. So I think this is a perfect example of a leader that is going to use this as an opportunity to really take a step back and think about how to save cost with initiative links to sustainability. Finally, and this is also from the same person that was talking about the wave one, internal sustainability teams assisted by consultants like PwC and Accenture develop the strategy, methodology, and reporting structure, data points, assessments, and gaps, and reporting policies, procedures, and controls are basically in progress right now. So again, thanks everyone for participating. Feel free to keep throwing your answers. We will share the insights summarized and anonymized after this for all of you to have access to. But maybe going back to you, Gergana, it seems like we've heard from a lot of at least wave one and wave two and some question marks. Maybe given that and given what you heard, would love to hear from you specifically around wave two. Like, what should wave two companies keep doing? And maybe if you can divide it into companies that have more than 1,000 and companies that have fewer than 1,000 employees. And maybe also if you can answer some of the questions that were asked regarding, like, if you're wave two, less than 500,
Yeah, what do you
you've
do?
done your DMA, what do you do
Yeah,
next?
that's one of the biggest questions. So if you allow me, I would be contradictory, and I will just say less than 1,000, because the 1,000 threshold does align with the CSDDD, and it does stay in the current level, in the current proposal. But as mentioned at the start, again, the jump between 250 and 1,000 is big. So I would even advise the companies that are in wave two that have, let's say, 500, 600, to still think about it from a perspective of, okay, there is a chance it might still apply to me. So then the question would be, what do I do with what I currently have done? Or if I haven't done anything, should I do? Now let's put it this way. So if you have already started thinking about reporting next year, let's say you had more than 250, so let's say you had 400 and 500, you were thinking that you'll be reporting next year and you started doing a DMA, by all means use it. We have a lot of clients that were halfway through or even finishing, wrapping up, doing the stakeholder engagement, or we're already having some idea of what are the material topics or subtopics. Definitely use it. I'm not saying necessarily publish it. You don't have to report it, you don't have to utilize it like publicly, but you can still use it internally for, first of all, stakeholder engagement, second of all, building on what you currently have. I think one of the comments mentioned gap assessment. By all means, the gap assessment is one of the most useful things that you can do. And it's not just looking at the data, because that's one thing that didn't go that well with the initial draft of the CSRD and the way you were talking about it. We kept focusing on 1,000 data points, or however many data points. Like there was almost like a scare factor of, oh, you have so many data points to comply with. That's not the purpose of the regulation. And I think that there was an opportunity missed at the start to use it as a strategic tool, to have these conversations with people within the business, talk to your stakeholders, internal and external, think about where their values might differ and what are you doing something about that already. And I think another comment talked about the real impact. This is where the beauty of this lies. Ultimately, having a process in place that guides you nicely through certain steps that everyone else will be taking. And ultimately, there's going to be a report at the end where you'll be able to show against your competitors and the wider market, where do you stand? So this will not change that much, whether you have 999 employees or 1,001. So this is another point. There has been a lot of analysis on where are the most impactful sectors. And ultimately, it's not always the case that the ones with the most employees have the largest impact, be it positive or negative. And we know that. So I would advise the wave two companies, again, if you started doing something, utilize it. If you haven't done anything, start thinking about, okay, how do I want to use that? Prepare a bit by thinking about what are best practices that you might be seeing on the market. Look at what your competitors might be doing or what the regulator is saying. There's been a lot of analysis already of the reports that are out there from the first reporters, like the wave one, the guinea pigs of this regulation. Look at that. Look at what went well and what didn't go well for them. Think about what is realistic for you. There have been in the comments questions for NGOs. Now for NGOs, it's a slightly different picture, because none of the first reporters are likely to have been NGOs. So for them, I think that would be more from the different perspective of what you can expect to see in terms of impact. And on the other hand, how can you be included, and how can your views be included in, let's say, some of the bigger firms, because you could be like an external stakeholders, for example, and we know that some firms were talking to the NGOs. So this would be my advice, like think about it from a strategic perspective. Don't focus too much on how many employees do I really have. I mean, of course, ultimately it will put you in scope or not, but if you are larger than, let's say, 400, 500, I would think about it still. And then in terms of the execution and how exactly the ESRS will look like, we don't know. Assumption is there's going to be more quantitative data points. So there's going to be more on the focus on the quantitative versus narrative. But again, that's not clear now. And of course, there's expected to be more guidance on how exactly a double materiality assessment should look like. But again, there's a lot already out there and been published that you can utilize to start planning a bit better.
Thank you so much, Gergana. We also have more questions, by the way, around, um, from an anonymous in the need that I'm gonna go through and again, maybe, Anastasia, I don't know if we can launch a poll. If not, maybe just if you can type the question also. I'm curious to hear from everyone, and I know this extends beyond omnibus and compliance, but I'm curious to hear from everyone in this room if you believe that sustainability initiatives can reduce cost for your organization, increase revenue, or just improve your EBITDA beyond just compliance. And again, feel free to type in anonymous responses, um, and give specific examples on how you've seen sustainability initiatives help you save cost or increase revenue, or improve your EBITDA margins. And EBITDA is like profitability. And if you haven't seen it, anything you're planning on doing that could drive value beyond just compliance. Maybe while we wait for the audience to drop some answers, Gergana, one question for you. And I find this actually question to be extremely powerful, and I love because it's thinking about the macro impact of Omnibus, which we don't really often talk about. The question is around how does the stop the clock proposal going to have an impact on the sustainability goals of the EU more broadly? Do you believe companies will delay actions regarding sustainability efforts? And I love this question because it's a macro question, and maybe Gagana would love to hear your thoughts on this. What are companies going to do in your perspective, and how do you see that impacting the EU sustainability goals more broadly?
Yeah, that's a very good question. And in terms of sustainability goals, we have been seeing a very different environment in the last few months. Not just talking about EU, but the global scene. We have companies leaving the net zero banking alliance, investment alliance. Like there has been a bit of a shift and commitments made, deprioritization in some areas, expanding the end goal, thinking about, okay, I will no longer have a target in place for 2030, I can bring it forward, or I'm going to get rid of some of my commitments. Now, in terms of the stop the clock, the EU has framed it as this is going to give companies more time to prepare and will allow better data, better process in place, and will make things a bit more make it easier for the firms to comply with it. It's not meant to reduce the ambition. However, by increasing the thresholds, we will, of course, end up leaving out a lot of companies. And we have been actually seeing some analysis already on what this might mean for SMEs that are out of scope and whether this will put them in an uncomfortable position where, as mentioned, they'll be following the voluntary standards and they'll be out of this whole, being ambitious place. That's definitely a risk. And again, the back and forth on where exactly we stand on the commitments made is not helping. So in theory, the regulation should not lead in reduce the level of ambition. But unfortunately, with the changing economic environment and uncertainty, the firms might actually prioritize other areas and they might postpone some of that. And this is why we're trying to say, like, don't take these 2 years as a sign that you're not required to do anything. Play your part. That would be my advice. Like, again, through the consultation that is currently going on. Also, there's different bodies that are gathering feedback all the time. You do have representative bodies as well. And just like by for example, reporting things the way you think would be impactful, you could have a say in where the EU and the wider market will sit in terms of the next stage of the ambition setting. I know it's not a clear answer just because ultimately no one knows what will happen tomorrow. Like, we're hopeful that the ability to focus a bit more on what makes sense for companies will make those targets a bit more set in stone even. So maybe if a firm needed this additional time to be 100% clear on its targets, then so be it, right? Let's try to see it as a positive thing. But on an EU side, there hasn't been an indication that it's going to lessen. If anything, we do have the EU Green Deal, and let's not forget that there's other regulation in place. And this is another thing I want to mention. It's not just this regulation that's driving things. So we have SFDR, we have the taxonomy now. Some of them have been kind of amended, with potentially will be amended with this proposal, but there's other regulation in place that's already driving some of the efforts that we're seeing in that space. So it's not all just part of CSRD. I know it's a significant part, but it's not the end of it all. And one thing to mention, some of the countries are starting to think about their own way of making an impact in that space. So I personally don't think that we can see a huge shift in EU's prioritization at this point. There could be some adjustments made just to enable the market to function a bit better in this level of uncertainty, but hopefully it won't lead to a reduction in the ambition.
This is great. Thank you so much, Gana. Maybe before we move to wave 3, just also more answers are coming in. So we heard from an ESG controller that is part of wave 2, that is saying that we will continue with strategic initiatives, specifically process and control dev, data collection and validation, global metrics collections and benchmarking, and focus on scope 3 emissions calculation. Thank you for sharing that. We also heard from some of the audience, I think 89% of you have voted yes. You see positive financial value from this. And as much as I would love to redefine value as a term, the reality is, I think in the next at least 24 months, it's safe to assume that value is still equal to financial value. My hope is in the future that if you're a business, polluting a river that has an impact on the community living at the bottom of that river, like that should be captured as part of your financial statements. The reality is that's not happening in the next 2 years. So it's really positive to see that 89% of you think yes, and seeing monetary value to your sustainability data. Some of you are saying that you don't currently see sustainability driving value, and the biggest bottleneck being getting better data first. And that is a big problem, right? In the financial world, a dollar is a dollar, and it's easy to capture that. We're creating a new language here, and this will take years, if not decades, because a lot of the data is unstructured, it's nascent, and before we even can have a conversation, we need to create a common language. And I think we're still at that stage of the game for most companies globally, where data gathering is still the biggest bottleneck. We heard from others saying sustainability strategies must be considered as a value creation exercise, creating profitability and EBITDA while attending to material matters and compliance. So yeah, love those answers. Maybe one just small example that can hopefully leave you with a bit more hope is, we have a lot of customers that are already embracing like circularity initiatives that are already seeing financial impact of that. We have companies buying back tires and using those tires to create flooring for commercial real estate properties. We have clients buying back, created a buyback program in the apparel space from customers where they can give customers credits to then use towards purchasing other apparel. And I'm personally, I've embraced that mindset as well. Like, I don't buy anything unless I give something back. And most places actually don't really advertise it, but most places are starting to have like buyback programs, whether it's, Apple or Levi's or other like retail locations. So they don't really advertise it, but you should really ask about it. And I think it's, very important to start seeing these programs at scale because they are a value creative exercise. Sorry, again, before we move to wave 3, one last question on wave 2. It's coming from a non-financial reporting manager, actually, sorry, this is not a question, this is more of a statement. Non-financial reporting manager, wave 2, going on with the implementation project, but focusing on quantitative data points and defining processes for data collection and control. So it's really good to hear that you're using this as an opportunity to establish better processes for data collection. This is the right time because you don't want to be, caught by surprise in 6 or 9 months when this suddenly comes back into the picture. Gagana wave 3. I think Ursula, the president of the European Commission, said that the small and medium enterprises are the heart of the European economy, and that is true, right? I think 70 to 80% of companies in Europe, if not more, are SMEs, and you actually need these SMEs to keep growing and thriving, to be able to keep for the heart of the European Union to keep like pumping blood. And actually, that's not only the case in the EU, also in the US, with the rise of tariffs and that kind of uncertainty, a lot of small and medium enterprises are going through, like uncertain times, many of whom feeling like their business is really threatened. As you can imagine, if you are working for an SME or you have started your own SME, it's a fragile ecosystem today. So this could be a burden on top of everything else. So maybe from you, Gergana, first, but also from anyone in the audience that is part of Wave 3, would love to hear from you as well. But maybe, Gergana, what's your recommendation on what they could do going forward?
Yeah, so one thing to also mention for the SMEs now, the requirement for listed has been removed, so there's no reference of listed. And ultimately, if the scoping criteria goes in place, then it's no longer going to apply to them. So basically, everyone under 250 in the current stage and over or under, let's say, 1,000, if the proposal gets accepted, will not be in scope. We can expect that there won't be a mandatory requirement for the SMEs, even if, let's say, the threshold moves to 500. It's still not going to be enough for SMEs to be in scope, just because, as per the accounting directive, if it's less than 250, it's an SME. So there's not. I don't see a scenario in which SMEs will be in scope if the proposal for the substantive changes gets approved. If it remains as is, then they'll still have 2 years to prepare. So ultimately, again, given the slightly more cumbersome exercise for smaller companies that might not have the resources in place and that have not started thinking about it, just because initially, the timeline was already a few years from now, and they had an opt-out as well option. So I would be really surprised if any of the SMEs have started thinking about it. Please prove me wrong if that's the case, and put it in the comments. Now, what to do next? Ultimately, again, look at the voluntary SME standards. They're very helpful. They're very useful because they address areas that you might already be doing under a different type of reporting. Some of it might be voluntary reporting. You can be doing scope 1 and 2. You can be doing GRI, like any type of reporting requirement that you're already following could actually have a crossover with the VSME, and it might help, to add this additional layer if you can follow some of the requirements already. On a voluntary basis. Start preparing for it. Definitely, make sure that it's all done with a strategic mindset and thinking about, okay, what makes sense for me and where do I sit, for example, in the supply chain of others? Am I a supplier for someone? Am I expected to be providing data? And this is another thing that we had on the previous slides, is that the requirements of companies that are below the threshold, the information requirements that are below the threshold will not exceed the VSME. So if you are not in scope, but previously you're part of someone else's value chain, let's say downstream, you were a supplier, and they requested information from you, and you found it extremely cumbersome, and you could not reply, and you could not submit what was required. Now you have an actual cap of how much they can ask from you. And there's going to be, again, a strict guidance on how much you can be expected to provide. So that's another thing to bear in mind. Look at your value chain and look at historically what information has been asked from you. Are you expecting this to change? Have you had to respond to any of those data requests in the past 1 year, for example? And then you can handle it this way. Like, think about, okay, am I still going to be required? Have these conversations with people within your value chain that might have an impact on your immediate reporting and strategic needs as well. So maybe tackle it both ways, one from CSRD perspective, but one from like a wider business and what type of data you might need to provide.
Amazing. Thank you, Gergana. Maybe one last quick piece of advice here is for SMEs, because we work mostly with companies that are mostly in wave one and wave two today, but we also, many of them are reaching out to their suppliers who are SMEs, asking them for data and, putting myself in the shoes of that person receiving that request and empathizing with that person. It's a lot. So my advice here is really beyond what Gergana said and what is on the slide. Reach out to your three biggest customers and ask them what are you expecting from me in the next 18 months if you haven't heard from them yet. And if you have heard from them, use it as an opportunity to ask for a meeting and have a conversation and think about how you can work together to capture that data, but also more importantly, to turn that data into a competitive advantage for you and for them. Because in most cases, it is a competitive advantage. There's no platform to have these conversations yet. I was at a conference in Colorado 2 weeks ago, and I was in the middle between two sustainability leaders. On the left was a sustainability leader from a major American airline, and on the right was an agricultural company whose byproduct is sustainable aviation fuel that is like too expensive from for the airline person on the left to be able to buy from the right person. But the right person is disposing that as waste because it's a byproduct of their agricultural process. Like on the left, they think it's too expensive. On the right, they're wasting it. Have a conversation. There's always an opportunity, and the opportunity starts with just engaging your customers. What are you expecting from me? What is something I'm producing that I don't need that could be needed for you, and vice versa, right? Sometimes you're selling to those customers, but there's an opportunity to buy back from them and give them credit for them to keep buying from you. Is there a world where you could change your commercial model from selling to leasing, for example, to be able to align incentives better and create like more financial and competitive advantage for both of you? So have these conversations, because at the end of the day, regardless of whether you're mandated to comply or not, some of your biggest customers or some of your investors will be asking you for those data points, and getting ahead of the game is important. The last one, wave four, that's a complicated one, Gagana. Maybe before you jump in, my advice to wave four is like ask a lawyer. If you're unsure, like ask a lawyer, because every single company that is a non-EU company with a non-EU parent has many legal entities, sometimes dozens, if not hundreds, and it's very complicated to understand how you want to even get started. So, we're here to help. Obviously, feel free to reach out, but also if you have a general counsel, whether in-house or someone that you trust, ask them about what's the best way to approach this, because every single company is different based on my experience. Maybe Gergana would love any practical recommendation you have for those companies.
Yeah, I'll definitely echo that. Ultimately, it will have to be, backed by a legal opinion. And even though in theory the timing is the same, what has changed is the thresholds. So currently the substantive proposal, is talking about making it basically more aligned with the changes that we're seeing for wave two. So the threshold criteria, the size criteria would be 450 million euro net turnover in the EU rather than 150. So again, that's a significant jump. We don't expect this to change because this is more aligned with the CS-DDD, and ultimately we can expect if it's a non-EU entity, there's been a bit of a pushback on the extent to which they have to be in scope of CSRD. We've been seeing some US companies challenge that legally as well. So ultimately that is likely to stay higher. Even if it's not 450, it will still be higher than 150 for the last two consecutive years, and ultimately having either an EU branch or one large subsidiary. Again, the threshold for the EU branch has been increased from 40 million to 50 million, making it aligned with the large company threshold. And one thing to flag here is that a large company is as per the current understanding of large under the accounting directive, which is a bit confusing because we are seeing the large criteria for wave two to change to the 250 turnover and the 50 balance sheet and then the 1,000 employee. But here for the non-EU, the only mention in the proposal is that there's an increase of the turnover that is going to be expected of the branch. But the large subsidiary can still be less than 1,000 employees. So that would be in line with the accounting directive. So meeting 2 out of the 3 criteria, 250 employees, 50 million turnover, 25 million balance sheet. So that's been a bit of a discussion point on a lot of articles that we have been seeing, and some businesses have been questioning this because even though some of the threshold of 50 million is aligned, then this leaves the question open as to why isn't there, like, let's say, 1,000 employee requirement as well. In the current text, there isn't. It might be changed. We don't know yet. And of course, what Patrick said around reassessing where you sit and how you could be impacted is absolutely key here. Thinking about whether some of the companies that you currently were thinking will put you in scope, they might not put you in scope anymore if, again, the threshold changes and they don't meet the employee criteria. But also think about what would make sense if you're in scope from a reporting perspective, because some of the consolidation that you might have been planning to do might no longer be possible. And also it might make sense to have, let's say, an individual report initially, and then have an ultimate non-EU parent, again, depending on where exactly your subsidiary will fall in scope and how exactly this will look like. So definitely around the reporting, reevaluating your operations and thinking about the thresholds. And of course, keeping an eye on how the final proposal on the thresholds will look like.
Absolutely. Thank you so much, Gergana. Very, very useful. I know we're almost at time here. Maybe just taking a step back, I do want to start by saying, like, please feel free to reach out to Gergana and me. I know it might be a bit, like, it might be a bit scary because, Gergana works for a consulting firm. I'm a vendor. So you're like, what are these people selling me? But generally, like, we care about your success. We're a small community. You have to keep fighting a good fight. So do reach out to us if you have any questions. Maybe taking a step, just recapping what I heard, and maybe Gergana would pass it over to you for like a final closing point. I heard 3 things today, 3 core themes that I'm going to recap. Theme number 1 is like, no one is pausing and stopping, and everyone is moving forward. Now, different companies are at different stages of maturity and have different focuses, and that can mean different things for you, right? I heard some of you focusing on DMA and gap analysis. I heard some of you focusing on gathering data and building infrastructure. Some of you focusing on internal controls and processes. Regardless of where you are in your journey, there are no regret moves you can do. For me, the core 3 non-regret moves are double materiality assessment. It is a strategy refresh. Data infrastructure, fundamentally important, regardless of the why you're doing it. And obviously, you need to know why you're doing it. Number 3 is gap analysis to understand where you are and where you want to be. Number 2 is greenhouse gas data is still very fundamental. So if you don't know where to start and you don't have the bandwidth to do DMA, just start with greenhouse gas. Number 3 is this is a value creation exercise. And most of you here in this room will become the CEOs of your organization, because the next wave of CEOs will be from sustainability managers or compliance and legal and finance managers that have a sustainability focus. And what you're doing is so important. My biggest advice here is reach out to your CFO, reach out to your customers, reach out to your investors and ask them what really matters for them. What are metrics they are keeping track of? And understand those deeply, because those are what I call performance metrics are really important. And guess what? All of them have a sustainability root, whether you know it or not. So I don't know, Gergana, if you have any closing words. And again, thanks everyone for making the time for this wonderful conversation.
Yeah, thank you all. And thanks a lot for all the questions. I think this is my favorite part, when you can see all the nuances of, people's current issues and thoughts and how they're approaching it. So I would say, as a wrap up, there's like one thing that you can do is to think about it as a regulation, of course, that you will eventually follow or not follow, depending on how the proposals look like and how they get approved. But think about it also as a tool and an opportunity to talk about what matters to the business. And then there was a mention of the financial relevance of sustainability data and sustainability reporting. Ultimately, we're seeing that. We can see how risks and opportunities and dependencies and impacts will ultimately have a place in your final report. Whether you call it sustainability report, whether you call it our message, our mission, like, it doesn't matter where exactly it sits. If, you know, even if you don't have to comply with CSRD per se, you can still use some of that. And if you have to apply this current framework, of course, think about it from not the perspective of things are changing too fast or every day there's an uncertainty. Just take its core and what it's meant to be guiding you to do, and do it in a way that makes sense to you, and use these 2 years. We have been given these 2 years, so ultimately we have to make the best out of it.
Absolutely. Thank you, Kiran. This was a wonderful conversation. Again, thanks everyone for joining. We're going to give you time back now. We will share all the insights, the presentations, the anonymized notes from this. Do reach out. We care about your success. We are a small community. We have to keep fighting a good fight. And, you know, guess what? In 20, 30, 40, 50, 100 years, we will all look at the mirror and or talk to our grandchildren and tell them all the great work that we've done to help progress this conversation forward. And the reality is it will happen. It's only a matter of time. Um, Everything is, you know, pointing in the direction that, you know, this is a value creative exercise and every business needs to do this, and it is no longer a nice to have, and it is a must have. So thanks again for joining, and look forward to staying in touch. Thank you, everyone.
Thank you.